When you look at a Bitcoin price chart, what do you see? For most people, it's just chaos. These wild, unpredictable swings up and down, huge rallies that seem to come out of nowhere, followed by these absolutely brutal crashes. It just looks like a gamble, right? Driven by pure emotion. But what if I told you there's something else going on? A kind of hidden rhythm, a predictable pulse that's been coded into Bitcoin from day one. So that's the big question, isn't it? Is Bitcoin's price just random noise? Or is there actually a structure to it all? A pattern that once you see it, gives you a completely different lens to view it through. A framework that most investors just don't have. Okay, let's really dig into this. There's this saying that just perfectly nails this whole idea. There is a pattern here, and it has repeated itself with remarkable consistency throughout Bitcoin's entire life. Now, this isn't some crystal ball stuff or wishful thinking. It's grounded in math and economics. And I'm telling you, once you see it, it totally changes how you think about this thing. So where in the world does this pattern come from? Well, to get it, we have to go right to the source, to Bitcoin's actual code. This rhythm isn't driven by hype or speculation. No, it's driven by a pre-programmed, totally unchangeable event that's fundamental to how new Bitcoin is even created. It all starts with something called mining. And forget what you're thinking, we're not talking about pickaxes and hard hats. Bitcoin mining is this super high-tech global race. All over the world, these incredibly powerful computers are all competing 24/7, trying to solve these really complex math puzzles. And the whole point of all this work? To verify all our transactions and to keep the entire network secure. Now, you really got to pay attention to that last step. The winner of this race, the first one to solve the puzzle, gets a reward. And that reward is brand new Bitcoin, just created out of thin air. This is literally the only way new Bitcoin ever comes into existence. It's the payment for doing the hard work of securing the network. And this, right here, this brings us to the engine of the entire cycle. It's an event called the halving, or sometimes you'll hear the halving. Bitcoin's creator programmed this rule right into its DNA. About every 4 years, that reward we just talked about, it gets cut in half, sliced right down the middle. Nobody decides this, nobody votes on it. It just happens, automatically, like clockwork. And this has already happened 4 times. The flow of new Bitcoin entering the world was suddenly and permanently slashed in half in 2012, then again in 2016, again in 2020, and most recently in April of 2024. I mean, this is a massive pre-scheduled shock to the supply. So the million-dollar question is, how has the price reacted when this happens? So let's get into the evidence. Let's just walk through the history, looking at the 3 cycles that are already complete, and you'll see a pattern emerge that is, frankly, pretty astonishing. We're going to look at the price on the day of the halving, and then see what happened in the 12 to 18 months that came right after. Let's kick it off with cycle 1. It's November 28th, 2012, the day of the very first halving, and 1 Bitcoin would have cost you about $12. $12. I mean, at this point, it was just this tiny niche little thing that only a handful of computer scientists and cypherpunks even knew existed. But then, over the next year, something pretty incredible started to happen. That supply cut began to take hold. By late November 2013, almost exactly 1 year to the day after the halving, the price of 1 single Bitcoin had skyrocketed to over $1,100. Just think about that. That's a 90 times return on your money in just 12 months. Absolutely explosive. So, was that just a one-time fluke, or did the pattern repeat itself? Okay, let's jump ahead to cycle 2. Fast forward to the second halving, July 9th, 2016. Now, after the big boom and bust of the first cycle, the price had settled down, and on this day, Bitcoin was trading for around $650. And wouldn't you know it, the post-halving rally ignited all over again. It started off kind of slow, but then in 2017, it just went parabolic, eventually peaking at nearly $20,000 in December of that year. That was about 18 months after the halving. So what about the return this time? It was a 30x gain. Now, yeah, that's smaller than 90x. But let's be honest, a 30 times return in a year and a half is, well, it's an absolutely incredible result by any measure. The pattern was holding. And that brings us to cycle 3, the third halving. This one happened on May 11, 2020. I mean, think about what was going on then. We were right in the middle of global lockdowns, all this economic uncertainty. The price at that halving was $8,700. And you guessed it, just like clockwork, the rally took off. It smashed through the old all-time high and just kept climbing, eventually peaking in November of 2021 at $69,000. The return from the halving to the peak this time around was about 8x. So let's just lay it out. After 3 completed cycles, we have returns of 90x, 30x, and 8x. The pattern of a massive rally in the 12 to 18 months after the supply shock, well, it's pretty hard to ignore. Okay, so now that we've walked through the history, we can start to pull this all together into a practical framework. When you look at these cycles side by side, a few clear, repeatable rules of the rhythm start to emerge. Let's break them down. The first rule is the most obvious one. The percentage returns are getting smaller. Each cycle's multiplier is less than the last. And this just makes total sense, right? As Bitcoin's total value gets bigger and bigger, it takes way more money to move the price. You're just not going to get a 90x move on a $1 trillion asset. The math doesn't work. But here's where it gets really fascinating. While the percentage gains are going down, the absolute dollar gains per Bitcoin have actually been going up each cycle. So the opportunity in terms of sheer dollars has actually gotten bigger, even while the X multiple has gotten smaller. And there are other crucial parts of the pattern too. After every single one of those crazy peaks comes a painful crash. We're talking 75 to 85% drops. It's rough. But, and this is so important, the bottom of each crash is still way higher than the peak of the cycle before it. This shows you a clear, long-term trend upwards, even with all that volatility. And the timing of it all, it's just remarkably consistent. So, this all brings us to today. The fourth halving just happened in April 2024. If we take this framework we've just laid out, what might the historical pattern suggest about the cycle we are in right this very moment? Let's apply what we've learned. You know, in every cycle, you hear people say, this time is different. And funny thing is, they're always kind of right and also completely wrong. On one hand, yeah, this cycle is different. We've got these huge Wall Street ETFs now. You've got big companies putting Bitcoin on their balance sheets. Even countries are getting interested. That's a massive new wave of demand. But on the other hand, the core engine is exactly the same. The supply was just cut in half, as programmed. And human psychology, the greed and the fear that drives markets, that hasn't changed one. When you boil it all down, Bitcoin basically has a heartbeat, a 4-year rhythm that's programmed right into its code. And we are now in the post-halving phase of the fourth cycle. Historically, this is the window where the biggest gains have happened. Now, of course, past performance is not a guarantee of future results, but it is a powerful framework that's been hiding in plain sight. The rhythm is playing. The only question left is, how will you position yourself?